Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, June 22nd. Firstly to the S&P 500 on the daily charts here, and we see a continuation of the trend to the upside for today's trading. The prior day's trading, we saw selling coming into the market. Price action rejected on the previous day around the 21.25 level, and the day prior to today was a black body candle, downside momentum, sellers taking control. Today the buyers have taken back that control, but they have lost commitment once again above the 21.25 level, and that is a level that has been quite important in the recent past. And just 2 trading days ago we saw the market reject from that area. Now the failure of the market to close above there does suggest that we may not see the S&P 500 reach the major high at 21.34, but with the change of a black candle into a white candle suggests that the buyers are building some momentum. So if we can eventually see a strong positive test above 21.25 and perhaps a bullish close above 21.25, we could see the buyers strong enough to take on that 21.34 level and establish new major highs. Now any downside is likely to find strong support down around the round number 2100, and with the Kijun-sen and Tenkan-sen trading around that area, the support is likely to be very, very strong. In terms of Ichimoku in trending action, we have a bullish market in all 3 timeframes, trading above the cloud, the Kijun-sen, the pink line, and the Tenkan-sen, the green line. But if we look across here at the Chica span, it's been trading within and just above the corresponding price action. So not a lot of strong momentum in that medium-term time frame based on the Chica span, and it's certainly not strongly confirming the bullishness that we're seeing. So a lot here is going to depend on how the market approaches this 21.34 level, if the buyers are strong enough, and whether we can breach above 21.34. And I suggest that if we can breach above there, we're likely to see that Chica span start to support the trend in the all 3 timeframes. Just looking to the weekly chart with the S&P 500, and here we see the market finding support down below the 2079 level, almost down to the 2067 level, a previous important area of support, but all the way down through that 2100 down to 2067 we have strong support, and then down below there the Kijun-sen trading at 2057. For this week that has finished trading, that second last candle on the chart, we saw strong resistance coming in at the 2119 area, and at the moment we see this current candle attempting to build momentum for an assault on the major high at 2134. Looking next to the Dow 30 in a similar type of candle, a white body candle as opposed to the black body of the previous day's trading, a shadow on the top representing price rejection. If we look very closely here, we see this highlighted yellow zone that extends up to about the 18206 region, and look at these candles every time that we've tested up here on 1, 2, 3, 4, 5, 6, and now the 7th occasion we see this price rejection, with the buyers losing commitment as they test to within this area, and there is a likelihood that we could see something coming into the market as we've seen here consistently. Now the thing in the favour here of there not being any strong selling is the strong support now around the Kijun-sen indicator at 18029, and then we have the Ichimoku cloud actually moving up towards that 18103 level at the bottom of that zone, and that will occur over the next month or so. So the solid base of support is going to become higher and move in a dynamic way up towards that support and provide a very solid base below the Dow 30. Now a lot depends on whether the market can stay up there, but here we've seen this strong rejection, and it will be very important trading for this coming next month. Now if the buyers are strong enough to breach through this highlighted zone and up above this area around the 18,200 level and close up above there in a bullish manner, we could see a test to the previous resistance area at 18288, and then even a possible assault on the 18351 level. Moving next to the Nasdaq 100, and here we see a very different type of candle. The body size on the Dow and the S&P 500 on the daily charts was very much larger, so the buyers had actually built a lot more upside momentum in net terms between the open and the close than we've seen with the Nasdaq 100, and this is reason for concern. At the end of a fairly strong uptrend that we've had for the past week or so, we see the formation of this small spinning top type candle, almost a doji candle but not quite, and the spinning top type candle is a candle of indecision. With the market testing up above 45.51, we've seen that price rejection as shown by the wick on the top, the shadow, and also on the bottom we see upside price rejection. Probably greater downside price rejection than upside, but still the implication is here with the size of the body reducing drastically, and that suggests a possibility of a change of trend. Now all this is, however, is a possibility, so what we need to look for is confirmation. So we'll be looking for a lower high and a lower low to confirm, and if we look back a couple of days ago, we had a similar type of candle, a very small body candle, but we didn't see confirmation there. So this really does show how important it is not to preempt the market and look for confirmation in the market. So any strong price activity down below the low of today's candle at 45.34 could see the beginning of a new downtrend. If we do see that downtrend form, we're likely to find some very strong support coming in at this previous resistance area at 45.10 at the bottom of this highlighted yellow zone of resistance. If we see strong buying coming in early and the market breach up through the high of today's candle, we certainly could see a strong assault on the major high at 45.62. Just using the Fibonacci extension technique here with the Nasdaq 100, and we're examining the relationship of the current first time frame uptrend to the immediate previous first time frame uptrend. And here we previously saw the market trade in a bullish manner up through the 100% level. The next level here is the 161.8% level at 45.88. So this is not giving us a guide as to whether we're going to see a correction now, but it is suggesting that if the buyers are strong enough to breach through the major high and test up to this 45.88 level, and if we see some indecision coming into the market there or some selling coming in, we then could see a correction of that trend. It doesn't mean that we might see the correction to this first time frame uptrend at the moment, but based on the Fibonacci extension technique, that's an area we should be watching at 45.88. And just using the Fibonacci retracement technique, we traded through the 100% level in a bullish manner, and this is also suggesting that we have to look to a higher level, the 161.8% level on the Fibonacci retracement, which is in expansive mode, at 45.82, and only 6 points below the target with the Fibonacci extension technique. Now, just comparing some of the indices in the US equities market to the S&P 500, and here the first subchart is the relative strength versus the SPY ETF, which is the S&P 500. S&P 500 represents the larger cap stocks in the market, moderately broad range, 500 stocks, and but most of them are the larger cap stocks. And here we're looking at the comparing the S&P 500. The S&P 400 mid-cap index ETF fund to the SPY ETF fund, and we see that it's trading up above each of the Ichimoku indicators, looking quite strong. White body candle for last week's, and this is on a weekly chart for last week's trading. The Chica span is above the corresponding price action. If we look here on the relative strength, very strongly outperforming the S&P 500, so the mid-cap stocks were outperforming the larger cap stocks, then a moderate performance but not underperforming, and now for this last week or so we're starting to get up towards and just above that upper band, and suggesting that we're seeing some moderately strong outperformance in the mid caps as well on the weekly charts. Just looking on the daily chart here with the mid-cap ETF, IJH is the code, comparing it to the SPY ETF, and here we see that outperformance, and for today moving up above the upper band for the last couple of trading days, suggesting that we have strong outperformance. Momentum of that relative strength is actually still trending up, and trending up moderately strongly, and suggesting that we should continue to see stronger performance of the mid-caps against the larger cap stocks. And if we look at the small cap S&P 600 Index ETF Fund, which is IJR, comparing that to the SPY ETF, S&P 500 ETF, we see for the last 2 or 3 weeks the strong outperformance, and we're seeing a continuation of that. So the Ichimoku chart looks pretty much in line with the mid-caps, but stronger outperformance by trading further outside of the band in terms of relative strength on this first sub-chart. And the daily here really does show that outperformance here. The relative strength comparatives has been outside of that upper band for the last couple of weeks, and it continues to trade up outside of that band. Momentum on the relative strength is quite strong, and volatility is trending up very strongly off a cyclical low and suggesting we could see further upside. One reason for concern is this doji type candle that has formed for today's trading. There is a possibility of a change of trend, but I suggest that if we do see that, we're likely to find strong support coming in at the Tenkan-sen indicator, which is at 119.78, and then we could see the ETF bounce back off there. But here, this is really showing where the action has been in the equities market in the US, and it's been in the smaller cap stocks.